the international refining revenues. Wall Street a little bit underwhelmed. What do you make of the reaction?
Well, Sarah, as you said, it was a very strong quarter, 4 times better than a year ago, and really our best quarter in a decade. We're delivering on our commitment of higher returns and lower carbon. Our first quarter return on capital employed was about 15%. Mid-year we'll close on a renewable fuels acquisition that we're very excited about. And in a market that is moving quickly and is volatile, there are certain timing effects and other things that are difficult for the market to anticipate, but it was a very, very good quarter.
What about on the cost side? How are you dealing with all the issues, from wage inflation to everything else going up?
Well, we're a long-term business, so we plan our work and we work our plan. There are inflationary pressures in the economy, but much of what we do, we've already contracted for, we've permitted, we've laid it out. And while we're seeing some pressures, it's all very manageable. It's all within our budgets, and we're not seeing anything that is something I don't think our company is very well prepared to manage as we go through this cycle.
Well, certainly the higher prices help. You said, Mike, in the release today that you're doing your part to boost domestic supply, and I know you have increased it this year, but it does feel like you and some of the others have been a little reluctant to really turn it up at a time where we need U.S. energy supply very much right now, and Europe needs it even more.
Well, I would see it a little bit differently, Sarah. Our first quarter U.S. oil and gas production is up 10% from last year. Our capital spending is up 30% from last year on production. We raised our Permian guidance from 10% growth to 15% growth today. And first quarter was the highest production we've ever had in the Permian, nearly 700,000 barrels a day. So we are committing capital to this market. We are growing production, and we are adding supply.
But overall, isn't U.S. supply still below 2020 levels?
Well, it's below 2019 levels. I think if you look at 2020, during the depths of the pandemic, production came down because there was, demand was contracting and there was really no place to store the oil. In this market, Sarah, demand always moves faster than supply. On the downside, as we saw in 2020, and then again in 21 and into this year, as the world economy opened back up, demand surged very strongly, and supply doesn't typically respond as quickly, but it's coming. We see it in the U.S., we see it around the world.
So, I also want to talk about the cash returns, because that was a big part of the story today as well.
Sure.
You're giving back $10 billion of stock, ExxonMobil with $30 billion. What do you say to the politicians that might criticize that move and say, stop rewarding shareholders, it's the consumers that need relief at the pump?
Well, Sarah, we just talked about what this market needs to help prices moderate is more supply. Our production in the U.S. is up 10% year on year. Look, we're in a position with a strong balance sheet to do it all. We've got 4 priorities. We've increased our dividend per share 6% in the first quarter. We're investing to grow both our traditional business and our new energy business. Spending this year will be up almost 50% versus what last year was. We're maintaining a very strong balance sheet. And part of our value proposition to shareholders is to return excess cash through buybacks once we can satisfy those other needs. So we are investing in growth and new supply, and we can reward our shareholders at the same time.
Speaking of politics, Mike, I'm sure you know the congressional Democrats are now talking about an investigation into the big oil companies for price gouging. What would they find?
I think they'll find the same thing they've found every time that this has come up over the 40 years I've been working. I think they'll find nothing. In fact, I testified at a congressional hearing just a few weeks ago where we made it very clear that we don't control the price of oil, gas, or refined products, and we have no tolerance for price gouging. These investigations tend to have more of a political dimension to them than a practical one, and I think that the outcome will be the same as every other one that we've ever seen.
Dropping 760 on the Dow. It's been volatile. Clearly, the war in Ukraine is a big part of the story. Mike, where do you think prices head from here? We got as high as 130.50 back in March. Think we'll see that level again?
Well, it's a market, Sarah, that is it's not in equilibrium right now. It's a very unstable and unpredictable market. We've got demand being somewhat constrained by lockdowns in China and air travel that really hasn't returned. And yet on the supply side, we've got concerns about supply impacts of this conflict and sanctions and the other things that have emerged in response to it. It's a market that is pretty finely balanced right now. Inventories are at low levels, and there's a lot of upward tension in the market. I hope that the conflict in Ukraine is resolved sooner rather than later and through diplomacy, and I think that would take some of the pressure off of this market. If that's not the case, and if we were to see further escalation and further actions, that could put pressure on it in the other direction. So it's a volatile and unpredictable circumstance right now.
Right. What would that look like? What happens if Europe gets cut off from Russian gas, either by Russia or by an oil embargo that it imposes? What does that look like in the market?
Well, I think everyone is trying to find ways to reroute supply lines right now to meet the needs that exist in Europe and that could increase in Europe if we were to see some changes in policy or supply out of Russia. The fact of the matter is, normally these markets are in a state of constant flow, and supply and demand are two very large numbers, but they're very close to one another. So if you were to see a significant amount of supply come out of the market right now, it's very difficult in the short term for that to be, to be met from other sources, because those supplies are going to other markets today. And so that's why there is risk of an upward move in oil or in gas if we were to see further disruptions or changes in the situation in Europe.
So how do you deal with the uncertainty? How do you plan a business without knowing whether this war in Ukraine is going to end or could go on for years, and what the next chapter looks like? Do you look at it as a traditional boom-bust cycle in oil prices, or is this different?
Well, you said a key word there, which is cycles. This is a long cycle industry. It's a commodity business. It's very capital intensive. And the current price of the commodities that we sell really doesn't impact our investment outlook or our strategies. We have to look through that to a long-term view of supply, demand, technology, and markets across cycles. And that's what really drives our strategy. In the near term, the way you deal with it is you focus on the things you can control. We focus on safety. We focus on protecting people and the environment. We focus on cost control. We focus on execution. And then markets are what they are. And so you focus on the controllables, and then you take what the markets offer. 2 years ago, they didn't offer much. We had negative prices in this month, just 2 years ago. Today, it's a very different world. We can't overreact to either one of those. We have to try to see through those to the long term.
Mike Wirth, thank you for joining us from Chevron off earnings today. Appreciate the time.